Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. All about Apecoin, the controversial crypto project that has retail investors aping in. Is it a crypto gem or just another recipe for getting wrecked? Exchange expansion. Binance and FTX plant their flags in the UAE as Crypto.com sets up shop in the United States. What does this mean for BNB, FTT, and CRO? Another day for Diem. The developers behind Facebook's defunct digital currency raised $200 million to launch their own cryptocurrency. When will we see it launch? Ethereum explosion. One of the largest companies behind the second largest crypto raises almost $500 million, while MetaMask announces an airdrop. Everything you need to know. On-chain action. Balances of ETH and BTC on exchanges continue to drop as investors continue to accumulate. Why this could mean there's more positive price action in the works for both cryptos. Doomsday for the dollar. Saudi Arabia considers accepting Chinese yuan for oil while ignoring calls from US officials. Are we at the beginning of a new monetary order? Crazy crypto politics. Russia and Ukraine enact contradicting crypto policies. The European Union fails to ban Bitcoin. Argentina makes an anti-crypto deal. And Guatemala gets closer to adopting crypto. Are we on the cusp of another BTC as legal tender announcement? And a closer look at what comes next in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, a new cryptocurrency called Apecoin was airdropped to Bored Ape Yacht Club and Mutant Ape Yacht Club NFT holders, including yours truly. For those who don't know, the Bored Ape Yacht Club is the most expensive NFT collection by floor price, and holders of its 10,000 Bored Ape NFTs are given exclusive perks, notably direct contact with celebrities who hold them. Whereas the Bored Ape Yacht Club and its associated collections were created by a for-profit company called Yuga Labs, the Ape token airdrop was orchestrated by a non-profit called the Apecoin Foundation and is governed by the Apecoin DAO. This is probably why Grade A exchanges such as Coinbase, Binance, and FTX were able to list the Apecoin shortly after it was airdropped, and the hype that ensued managed to push Apecoin's market cap to over $5 billion. Critics of the Ape token airdrop, including Ethereum creator Vitalik Buterin, argue that all it did was effectively enrich already wealthy holders of Bored Ape NFTs, notably holders of the original Bored Ape NFT collection, who received around $100,000 worth of Ape tokens. Proponents of the airdrop argue that the Ape token makes it possible for regular investors to get exposure to and participate in the Bored Ape Yacht Club ecosystem, without having to shell out hundreds of thousands of dollars in ETH for an associated NFT. The fact of the matter is that there's not currently a clear use case for the Ape token, though there are many developers in the NFT, crypto gaming, and metaverse niches who have announced they will be integrating it or creating exclusive experiences for it, including Animoca brands. Whether the Ape token lives up to its hype ultimately depends on the community, because the project's direction will be decided via governance. Given the caliber of companies and the amount of capital behind the Bored Ape Yacht Club ecosystem, I reckon it's safe to assume that Ape will have some significant value in the future if sufficient demand drivers are created. The Ape token's current valuation is another question entirely, and even though its price has plummeted over the last few days, it's clear that hype continues to play a significant role in its price action. As such, be wary of anyone urging you to ape in, because buying what's likely to be a local top is some of the worst advice you can get in crypto. You can find out just how bad crypto advice can get by using the link in the description. Meanwhile, cryptocurrency exchanges have been accelerating their expansions around the world. For starters, there's FTX, which became the first cryptocurrency exchange to secure a virtual asset exchange license in Dubai. To put things into perspective, Dubai had only introduced this new framework 2 weeks ago as part of its ongoing push to become ground zero for crypto in the region. As part of its license acquisition, FTX will be opening a new branch in Dubai, which will apparently focus on institutional investors. Just a couple of days later, Binance confirmed that it had become the second crypto exchange to secure a virtual asset exchange license in the Emirate. A few days prior, Binance had secured a similar license from regulators in Bahrain, emphasizing the exchange's focus on the Middle East region. Meanwhile, Crypto.com began the rollout of its exchange services to regular users in the United States, something which had previously been limited to select institutional investors. The reason why these announcements are so significant is because each of these exchanges have their own respective exchange tokens that could stand to benefit from these developments. The availability of FTX and Binance in Dubai is likely to result in increased inflows into FTT and BNB, respectively, and their price charts suggest this is in fact the case. As for Crypto.com, its CRO token, which recently rebranded to Kronos, has likewise seen a small rally, and demand for Kronos is likely to increase as Crypto.com rolls out its features to users in the United States. Now, I'll leave links to my videos about all 3 exchange tokens in the description if you're interested. Those of you who have watched my videos about exchange tokens will know that one of their drawbacks is that their price action is heavily dependent on the actions of a centralized entity. In the case of crypto projects such as Facebook's Libra, aka Diem, the centralized entity in question would have total control over all transactions occurring on its blockchain. This was one of the many reasons why Facebook's Diem project finally died, largely unmourned, in February this year, and it ended with the enterprise being sold to Silvergate Bank, one of Diem's partners. Interestingly, the acquisition actually resulted in a rally for Silvergate's stock, with many market analysts saying that the acquisition gives the bank an edge in the digital payment space. This is simply because the tech behind Facebook's Diem was surprisingly solid, and if you watch my recent video about Dapper Labs' Flow blockchain, you'll remember it leverages some of the same tech. Diem's solid tech is the primary reason why the former developers of the project recently raised $200 million from various VCs to launch a new crypto project that also leverages Diem's tech. The crypto project they've created is called Aptos, and according to its website, it promises to be, quote, the safest and most scalable Layer 1 blockchain. One of Aptos's blog posts purports that its blockchain can handle a staggering 130,000 transactions per second. If true, this could make Aptos up to twice as fast as Solana, which is currently the fastest crypto on the market. As far as a launch date goes, Aptos is aiming for mainnet by the end of Q3, and the fact that Binance and Coinbase have reportedly been contributing to the project suggests Aptos will be listing there. Although it's unlikely that Aptos will topple any of the top crypto projects, it sounds like it stands a solid chance of cracking the top 10. This means it might be a good idea to open a Binance or Coinbase account if you haven't already, and you can find out which exchange is best for you by using the link in the description. Anyways, as far as I can tell, Aptos is aiming to be an Ethereum competitor, and if that's the case, then it's going to need a lot more than $200 million in funding. That's because Consensus, one of the largest companies building on Ethereum, has just announced a $450 million raise. What's crazy is that Consensus is planning on using a part of this capital to invest in ETH, and it may be a part of why ETH saw a nice pump last week. Consensus also plans on pouring a portion of these funds into MetaMask, which is expecting a significant upgrade by the end of the year that will introduce more extensive multi-chain support. As many of you will know, MetaMask is the most used browser extension wallet in cryptocurrency and recently passed 30 million monthly active users. In a follow-up interview with Decrypt about the announcement, Consensus CEO Joseph Lubin confirmed that the company is looking to decentralize MetaMask and that part of that decentralization will involve airdropping a token to users of the wallet. Unfortunately, Joseph did not specify when the airdrop would take place, but rest assured, that I'll let you know as soon as I know in my Telegram group, newsletter, and on my other social channels. In the meantime, you can familiarize yourself with the ins and outs of airdrops by checking out my video about those using the link in the description. On the topic of Ethereum, the balances of both BTC and ETH on exchanges continue to drop. This is important because when a large amount of cryptocurrency moves off of an exchange, it means investors are not planning on selling anytime soon. The interesting thing is that the balance of BTC on exchanges has been dropping since March 2020, and for ETH, this has been the case since September 2020. This is interesting because it suggests that investors have been accumulating BTC and ETH for almost 2 years, despite all the impressive price action we've seen since then. This begs the question of what exactly these investors are waiting for, because BTC and ETH have gone up by 8x each since their respective investors started accumulating. One possibility is that these investors are just waiting for something that will send BTC and ETH on a parabolic run. For BTC, this catalyst is likely to be the approval of a spot Bitcoin ETF in the United States, which could result in billions of dollars of direct investment into BTC, unlike the futures-backed Bitcoin ETFs we see today, which are just backed by paper contracts. For ETH, this catalyst is likely to be Ethereum's transition from proof-of-work to proof-of-stake, which will make ETH an insanely appealing asset to institutional investors who value yields above all else. It'll also scratch the itch of ESG investors who are concerned about the energy use of proof-of-work. As you may have noticed, Ethereum's transition from proof-of-work to proof-of-stake is fast approaching. The success of the final pre-merge testnet is probably why over $500 million of ETH was withdrawn from exchanges over the last week alone. Still, these milestones don't explain the scale of accumulation we're currently seeing. This kind of accumulation warrants another cause, and I suspect this cause is the beginning of a new monetary order accelerated by the unprecedented economic sanctions against Russia. You can find out all about those and what they mean for you by checking out yesterday's video. That will, of course, be in the description. As I mentioned in that video, the recent seizure of assets owned by Russia's central bank in response to the country's invasion of Ukraine has shaken confidence in the security of dollar-denominated assets. This is because every central bank around the world is now hyper-aware that any dollar-denominated assets they hold could be just as easily seized if their respective countries cross the United States. This is more significant than you think because over 60% of global trade is done in dollars, according to the Federal Reserve's most recent estimates. When a country has lots of extra dollars that it's made from selling stuff, typically these extra dollars are used to buy US government debt, aka US Treasuries. This is basically because US Treasuries yield a small amount of interest, which makes them a de facto savings account for foreign countries. More importantly, the massive size of the US Treasuries market means it's very easy to buy and sell billions of dollars of Treasuries without pushing up or pushing down prices. Now, this setup is obviously beneficial for the United States because it allows it to finance its operations by selling debt to foreign countries, and the dollar's use in international trade means there's constant demand, which keeps inflation low even with lots of money printing, at least in theory. The thing is that the unprecedented sanctions against Russia have created a serious incentive for countries around the world to stop using dollars, and now the world's largest oil exporters are considering accepting Chinese yuan in lieu of dollars. Note that this is one of many headlines we've seen in recent weeks, and some would say that this trend away from the dollar has been taking place for decades. If this trend begins to accelerate, it will lead to a decreased demand for dollars, which will result in lots of inflation for the greenback. If that wasn't bad enough, the decreased demand for US Treasuries will result in higher interest rates in the United States. This will effectively force the Federal Reserve to step in and buy US Treasuries, which will lead to even more inflation and likely hyperinflation. Before you panic, it's important to point out that this process takes time, but as folks like BitMEX founder Arthur Hayes have pointed out, this process has almost certainly begun, and that means it's only a matter of time before we see a significant shift towards commodities and, we hope, cryptocurrencies. Now, it's possible, if not likely, that this dollar doomsday scenario would be out of the question were it not for the counterintuitive policies we're seeing in countries around the world, and nowhere is this counterintuitiveness more obvious than in crypto-related policy. First, there's Russia, whose central bank has been calling for a crypto ban for months. Now, the Russian central bank has issued a digital asset license to the country's largest commercial bank. Less than 24 hours after that announcement, however, Russia's central bank said it will begin closely monitoring and scrutinizing crypto transactions. Next, there's Ukraine, whose president signed a historic law that makes cryptocurrencies legal in the country and provides regulatory clarity to crypto companies. At the same time, however, Ukraine's largest bank has reportedly begun blocking crypto purchases, likely because it's trying to preserve the purchasing power of the Ukrainian hryvnia, which has collapsed because of the Russian invasion. Next door, the European Union is engaging in the same shenanigans, with European politicians narrowly voting against an anti-crypto provision that would have seen proof-of-work cryptocurrencies banned on the continent. Even so, EU politicians are still pushing to apply the infamous travel rule to every single crypto transaction, which could have the knock-on effect of making decentralized finance illegal, since you can't collect information about counterparties in these kinds of peer-to-peer transactions. Across the pond, there's Argentina, whose former prime minister had met with Ethereum creator Vitalik Buterin in December to discuss cryptocurrency, in a sign of the country's continued crypto adoption. Now, it looks like the International Monetary Fund has coerced the Argentinian government into promising to deter the adoption of cryptocurrency in the country in order to secure a $45 billion loan to fund the country's infrastructure development. This is not all that surprising, given that the IMF isn't happy about El Salvador's BTC adoption, and it knows many other Latin American countries are considering doing the same. Luckily, it looks like the IMF hasn't managed to get between Guatemala and BTC because former Blockstream CEO Samson Mow posted a photo on Twitter of him drinking a nice cup of Guatemalan coffee. If you've been keeping up with my weekly crypto reviews, you'll know that Samson recently left Blockstream to encourage the adoption of crypto in other countries, and he apparently played a role in El Salvador's own crypto adoption. Now, this could of course just be speculation, but given how eager some Latin American countries are to adopt crypto in the face of an increasingly inflationary dollar, I won't be surprised if we hear another announcement of BTC becoming legal tender soon. Bitcoin Miami, perhaps. Now, if you're curious about El Salvador's Bitcoin adoption, you can learn all about it using the link in the description. Turning to the charts, we can see that BTC continues to bounce around within the ascending triangle pattern I mentioned in last week's crypto review. Ascending triangle patterns have a tendency to break to the upside, and that means we could see a massive BTC pump in the coming weeks, which would take the rest of the crypto market on a wild ride. This week's winners are Apecoin, Ethereum Classic, Thorchain, Aave, and Avalanche, a peculiar combination to say the least. The origin of Apecoin's pump is pretty obvious, pure hype around a new and popular cryptocurrency's future potential. It's too soon to say what Ape will do next, but my bets are on a gradual decline in price before another speculative rally. Next up is Ethereum Classic, and though I wasn't able to pinpoint an origin for ETC's pump, my best guess is all the progress that's being made on Ethereum's transition from proof-of-work to proof-of-stake. It's likely that many Ethereum miners will opt to start mining ETC for as long as it's profitable, since the alternative is just to throw out all their expensive mining equipment. Some investors could also be hedging the risk of a botched merge with Ethereum's most direct competitor. More about that in the description. Anyhow, even though ETC's current pump barely registers on its long-term price chart, it seems to have broken through a significant zone of price resistance and could continue to rally into the $50 range. I know this sounds crazy, but many cryptos have proven that these kinds of perpetual pumps are possible, and the best example in this case is Thorchain's Rune, which was rallying on the release of synthetic assets and is now rallying because of a hard fork that's expected to occur today. Rune seems to be facing significant resistance around the $10 level, but if it can break through that barrier, then it could rise as high as $13 before seeing a correction. As a quick side note, I want to issue a quick correction on my Thorchain video. It is in fact possible to swap two different assets on Thorchain without holding Rune using ThorSwap. Apologies for that mistake, I'm only human. I digress. As for Aave, it's rallying on the release of Aave v3, which looks absolutely incredible. The Aave app itself is also hosted on IPFS, which means it's fully decentralized and can't be taken down by regulators. As you can see, however, Aave is having a really hard time getting out of the hole and seems to have succumbed to the significant zone of resistance around $170. I'm sure DeFi Summer 3.0 will change this, and in the interim, you can learn all about Aave v3 using the link in the description. Last but not least, we have Avalanche, and Avax appears to be rallying because of the upcoming Avalanche Summit in Barcelona. The event is expected to attract lots of heavyweights in the crypto space, and I'm sure we'll get some exciting announcements as well. In contrast with most other cryptos, Avax has held up surprisingly well despite the recent downturn, but it seems to be struggling to overcome all the resistance in the low $90 range. That said, I see a cup and handle forming on the daily, and if my observations are accurate, we could see Avax pump as high as $110 in the not-so-distant future. If you want to learn more about this technical analysis stuff, you can refer to my technical analysis tutorials, and I'll leave the first edition for you in the description. And that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you're looking for the kind of crypto deals that will add weight to your crypto portfolio, be sure to check out my deals page using the link down below. Thank you so much for watching, and I'll see you all in next week's episode.